What's your level of faith in the Fed?
Well, the Fed is very, very, very late to taking away the punch bowl at this party. I mean, this party's pretty much gone into overdrive. And now that they are attempting to do their job, they're doing it in a pretty ham-handed manner. And so, right now I would say that the chances that the Fed is right are pretty low. There are those that argue that we're probably already in a recession, at least a mild one. Nobody thinks we're going into a very, very steep recession, but I think that there is a meaningful concern that this very aggressive rate hiking that's targeted against inflation that's being driven by commodities lately, and that's not a kind of inflation that the Fed is usually very effective at controlling. So it sort of is a head scratcher.
Yeah, if they can drill more oil wells or produce more steel pipe or find more ships or shipping containers, they might be able to control inflation. I guess they do have a blunt instrument, and that is putting the economy into a slowdown. Sounds like you just said, Gina, if we do go into recession, you do not believe it will be that severe or deep of one. Is that fair to say?
Yeah, I think that's our current assumption right now is that if we do go into a recession, or in fact, if we're there already, it's probably going to be a mild recession. I mean, we were already coming off of the back of a rebound as COVID pandemic started to feel like it was coming to an end, although it turns out it's not over yet. But at least, the closing of the economy is, we had a big reopening, a big boom in the economy, and that we were already on the back of that already. And so this just really cooled the economy very quickly. And I don't think it was the Fed that did that, Brian. It was oil prices that did that. That's what cooled the economy.
Yeah. That's why we talk about it so much, pretty much every day, Gina. I guess if that's the case, then the calculus we have to do with regards to stocks is just trying to figure out how much earnings estimates are going to come down, or earnings themselves, not just estimates, are going to come down, and then put the appropriate multiple on that and come up with some kind of a number. Yesterday, Oppenheimer dropped their price target from 53.30, the high on the street in the S&P, to 4,800. I expect more will do the same. Would you expect that?
Yeah, we're definitely expecting these to come down, because if you assume that companies are going to have to revise down their earnings, and that's the general assumption, certainly ours, then you have to assume that we're not as cheap as we look right now. Right now, we look just fairly valued. And, some might say, well, then money should come rolling in. But as soon as you get those earnings revisions, we're going to look expensive again, and the markets are going to have to come back down one more time. So we see another bout of repricing over the summer, late summer, or early in the fall, which is usually that really scary time in the markets. And as it was once said, October is a very scary month, but so is July, November, December, etc. But we are going into that kind of fall time period when we could have a second round of repricing in the markets in order to deal with where we land in terms of interest rates.
Yeah.